How are we all doing this fine morning? What a great week it's been. Very up and down one yesterday. Sunday was great. Monday, Tuesday was awesome. Wednesday was the one for learning. I'm talking about in regards to the markets. We had a fantastic start to the week, as we have done for the past few months, actually. And Wednesday's been a tricky day if I looking back on my analysis, but Well, I want to talk to you today. Today's been a great start for the guys in the group, as well as, of course, we had some wonderful news to wake up to. Now, first and foremost, guys, I just want to explain that money isn't everything. Profits are better than wages, as the famous Jim Rohn said. But money isn't everything, but it certainly sort of like ranks up there with oxygen. You know, if you wake up to money, if you're getting paid, if you're doing, then it's certainly a better feeling than not. So I've spent definitely the last few years of my life working hard on being the best version of myself, regardless of money. I've not been chasing it, which in terms of figures and numbers, I would probably could add a few more zeros to my bank account if I had just been purely focused on the money, based on how I've been this year. But but that's not what it's about. Life's about the things that bring you joy in the small things. The family, the love, the traveling, the experiences, and I've certainly got a lot of that behind me, and certainly in the last few years. So don't regret any of that. And one of my mentors actually said to me that if you've not building wealth for a particular reason other than just to see how rich you can get, then it's all for nothing really. If you haven't got your health, it's for nothing. I mean, imagine this. Imagine spending many years of your life getting as rich as you can, as wealthy as you can, but cutting off people, cutting off the family, your kids, your world, not looking after your health. So then when you actually hit the target that you hit, because inevitably that we will hit this target, ladies and gents. If you aim for something and you keep at it and disciplined and focused and persistent, then you will hit that. But what are you willing to sacrifice in order to get there? Okay, so just take that into consideration when a lot of you are cutting off friends, family, and stuff like that. I'm all for removing people that hold you back or speak badly to you or negatively to you, but to completely cut off the world in order to pursue your career comes with a big sacrifice. So just be careful on that. I want to go through today's trade that I've just put in the group less than an hour ago. And as always, my Vault DB Capital Vault has a lot of recordings and training and indicators and lessons in there if you want to learn how I trade and how you can become profitable. The free signal group is, of course, giving you one or two signals a day to maximize your profits and help you. But the premium group is where the magic happens. Okay, deep analysis, plenty of trades, and a few laughs in between as well. It's getting bigger by the week, by the day, and very excited for what's to come. So let's dive into what I saw today, as this is moving right now. So this is gold. We love gold. We love gold. Gold has a mind of its own. It's a bit like a currency, forex currency with ADHD. Like it really does love to do its own thing. So first of all, I'll put my analysis in the group every morning of what I'm looking at, of what I've seen, and these areas are key. Okay, these areas that I've marked in blue. So yesterday I posted this, and as you can see, if I just move this out of the way, this area was tapped. Okay, during the New York session, US session, we had a big push down into this area, which I'd marked out before in my group. It tapped in, and I definitely got in a buy here. I did initially get in a buy here, and it stopped me out because I thought it might bounce off this indecision candle here. But then, because we were disciplined, we got back in and we rode all the way up. It was lovely to just leave that to run for a few hours while I went out for dinner. So that this area has been tapped. Now there is still an imbalance here, fair value gap, after the breaker structure from Tuesday. So we could at some point see this driven down to this area to fill that gap. But I'm not going to rely on that, okay? Because the market can leave the gaps there for days, weeks, even months on some occasions until it's ready to come back down here. Don't take away the fact that at this minute in time, there is a war going on. And when there's doubt in the economy and when there's war and fear and panic, people buy gold, okay? So every time there'll be an announcement of what's happening with the war or the economy, panic comes in and you'll see a huge push up like this, okay? So leave that area for now. This area was tapped yesterday. I marked this area out nicely and allow me to explain why I did that. So if we just go back in time to 8 o'clock, which is when I like to give my analysis out. Okay. First of all, I would have entered a buy here and posted it in the group. Okay, why? Because we have a double bottom. If I just remove all this here for now, we have a double bottom here, 2 rejection candles. Okay, and then we've got London opening. Throat seems to have just fancied going there. London opening, okay, happening. Let's see, there you go. First candle shows a bullish momentum. So we would have got in with our stop loss below here and target 3 to 1 to start off with. And then we'll just test it to see what's happening there, okay? What I advise people to do is to place like 3 trades, like that is equivalent to the amount in which you want to place. So let's say, for example, overall, just get this. Overall, you want to place a 1.2 lot size. Okay. Yeah. So what I would recommend is you place 0.4 times 3. Okay. So here you'll have your on MetaTrader you'll have 0.4 and you'll press it 3 times. Okay, with the same stop loss. Why? Because we want to leave. There's lower cost and spreads when you open 3 lower ones rather than 1 bigger one. Because bear in mind, every time you open a trade, there's a little commission charge, a little spread charge on it, right? That's why you don't pay tax on your Forex earnings, okay? Because so anyway, yeah. So it's moved up throughout the day, okay? Now we've hit TP1 is here where you closed one of these, so now you have 2 open. Okay, you've closed one in profit, you've banked some nice profit. You move this stop loss to break even and you let it ride. Bang, TP2, you can close the next one, but because of how much strength is in this candle here, maybe you want to leave it open. Okay, and then we're at the end of London session because the candles have now turned red. So it's up to you what you do. You would have collected 1,000 pips there, which is fantastic. Okay. You can now leave it. You can close it at the end of the session and reassess, or up to you if you leave it. I like to close at the end of the session, to be fair. I think it's the best because you just don't know what's going to happen. I mean, obviously, if you left it running, well done you. All the way up to the next, this is just like with gold at the minute because of the panic and war in Russia, war in Israel, sorry, getting mixed up now, so many wars going on. You can just leave these buys going. If you're in a great spot like here, you can leave the buys going if you can clearly see. And as if you did leave it to 235 pips up, which is fantastic. Okay. So that's the end of, let's say that's the end of that trade yesterday. Well done, everybody who won. Right. As you can see, it's done a huge rejection up here. If you go back in time, you will see that potentially there's an area way across here, somewhere across here. Yeah. If I draw a line, this top here, yeah. If I draw that line across, you can see that it's a key area. So it's in every right to reject that area. This is the important part of going back in time because you can see where it's rejected it from previously. The next area would be, of course, 71. and then above that is 82. So if you've drawn the lines, then when it reaches these lines, it allows you to think, okay, it could reject from here, so it's probably a good place to exit the trade if it reaches it, right? So let's see what happens. We'll go back down. Hope this is making sense for you guys. We'll just go back now. Now is a good time to put my other drawings back on for you guys. Oh, it's not going to let me. Never mind. Right, let's go back to where it was then. Okay. And there was our, let me just move on to 10 minutes. There you go. And this area here is where I've marked out. I was trying to go back in time to do the markings out. But here's the area that I would have marked out. Okay. And why I would have marked that out is based on this amount of volume here. And if I choose this indicator, that will confirm it. Right, where this red line is a great area to get in. Okay. Obviously, you don't just use that line itself, but it's certainly a great indicator. And the indicator is called SVP. On TradingView, you have to pay for the pro version, so it's like £20-something a month, I think. But it's a great indicator. You mark out your charts, your demand zone, wait for it to tap into that area, and then when it taps in, what you do is you put your stop loss below the area here, and let's see what happens. Voila, comes back up to the area. Why did I put the target here and not here? Well, as I mentioned before, targets are all about not only a percentage of the retracement, but also previous. So this target here was the main push. Okay, it hadn't reversed yet, had it? The whole push. So we was looking for an area from previous, which is why I showed you over here. This one is, if you work it out, this would be a 76% retracement. Okay, so we've pushed down against the trend. Yeah, see that? So the trend's up. We're meant to be going up. Okay, but we've pushed against it. So where the push starts to where the push ends, the retracement goes up, and you'll see it's 0.76. Okay, so that's why I can use that. Okay, and then of course, if you wanted to get in a sell, then that's up to you. It's against the trend, so just be careful. But this is what would have happened if so. Now we're going into today's trade that I was given. So I'm just going to explain why. None of this fancy stuff and indicators that I've just shown you there. If you know different strategies and different patterns, etc., then you can certainly use that in your own trading. Allow me to explain what I saw today, which was very, very simple. Could have worked. It could have gone against us, but you have to execute when this happens, right? So let's come on to 8 o'clock. Okay. Right. If I just go back, I gave the trade at 8 o'clock. I actually got in just before because, well, I have to test the waters, don't I? And obviously, it takes me time to type it all, and post my analysis and stuff. So this is why it's important you can use my trades and stuff and my lessons, but ultimately to learn it yourself would be more ideal, because then there's no delay, right? So what's seen here is very simple. This is the Asian session represented by black candles, and we're just about to start the London session. But what I've noticed is this here. Look, I've drawn a box here because there's rejections, rejection. We've come up, down, okay, and we've rejected it again. This shows me a simple double bottom, okay, bottom here, bottom here. So what I've done, trade in, stop loss below because it can push down, Give it a bit of breathing space in case it's a fake out. As I mentioned on yesterday's thingy, fake out is basically that, where it pushes down, grabs you, and then tricks you, and then goes the other way. Okay. So what I've seen is that double bottom, and what the double bottom is basically, you imagine that although there's a bit more that goes into trading, guys, it is very simple when you keep it simple. Okay. Double bottom. If you're imagining that you might have a year, 2, 3, 4, 5 years experience, you've seen things, you know the patterns, you know all that, but you have your own strategy. Well, imagine that there's still thousands of brand new traders coming into the market who only trade because they know this pattern. So they only trade the double bottom. So what that means is that when they see a double bottom, they're going to buy. When they see a double top, they're going to sell, right? That in itself will pump a lot of volume and money into the markets, meaning that even if it's not going to continue up, right, it will still give you 20 pips because of the amount of that's been pumped in before it may continue down, right? Obviously, the more the better, but this is why it's important to see these patterns and to take advantage of them and execute when you see them. Right, stop loss below, and well, the rest is history, as they say. Like, that's where we're at right now, I believe. I'll just play it forward. Yeah, that's where we're at right now. So if you just work like that, like, you can have all your strategy, all the indicators, but all I seen there ultimately was, and the reason why I posted it was I seen a double bottom. Okay, it might have backfired. Okay, was it in line with my my strategy? Yeah, a little bit, not fully. If I look on the volume, there's volume above, which means it could drive it into it, right? That's one sign, but it's too far away to actually say that's a definite thing. It's a session opening. That's another one. Its market structure is going up. That's another one. And here's my confluences as well, by the way, just in case anybody wants to see them. Market structure, okay, is bullish, going up, right? Overall. Then we've got Fibonacci from the last to the top there. No, there's no Fibonacci there. Supply and demand is this area, but it's already tapped this area, so no. And liquidity is the lowest part of yesterday's US session is here, the highest part is here, so it could take out. So in regards to this strategy, it's not really aligned with my strategy. However, we still managed to bank, what did we end up doing? 50? 68 pips. That's a huge push, right? Now, some of you are looking at this in, so TP1 and TP2 have been hit. I can take them off, right? And stop loss to break even, meaning that we've already collected enough, right? What I'm expecting this to do now is align with my strategy, okay? So let me just go over it again. Market structure is bullish, so we're going to be looking for buys. Okay, Fibonacci, so from the bottom here to the top there, so I'm expecting it to come here. Okay, stop loss below, and then aim wherever it goes to after that. Supply and demand, if I just look, turn that off, eliminate that. We have a area of demand now here, only a mini one. It's not a major one, but it's still an area. Basically, the last move down, this is a setup within a setup. Basically, the last move down before a big push up, that's an area of demand. Okay, it means it's driven into it, then pushed out. So this area here is now demand, right? Could very well just continue up. By all means, I'm not in control of the markets. But we've not only caught the double bottom, but we could catch this nice demand on the way back when it comes back down. Next one is liquidity. So now we have some liquidity here, represented by these spikes. And if we drive it across and drive it all the way up, this is all liquidity now. This is where there's buyers that have come in here, here, and here, too late to the party, and hoping now that their money's going to be brought back to them, and it continues up, which, you know, it's not a bad thing, because at the end of the day, we are in a bullish trend, meaning upwards trend. So they're okay to leave their buys around these areas and wait for it to go up. Point of control is the next one. Again, this red line represents point of control. We do have it. It's from this area here. It's, like I said, 30 pips. So I can't really use that. And you just look for any imbalances. Obviously, there's a massive imbalance here, but we're not going to go down here, I don't think. And then we just look for the session liquidity, which represents by the colors of the candles. This is a liquidity, this is liquidity, and this is liquidity, as I mentioned before. So we're still very much in this trade, and it's going very well. So guys, that is my strategy in a T. And if you want to get involved in the markets, trade yourself, learn to trade, use my strategy, use my signals until you're self-sufficient, and then you can just go your own way. But ultimately, guys, it's about making the decision, executing, and then keeping your stop losses tight. I make the mistake sometimes of leaving trades to run, and I always regret it. Even if it wins, I still regret it. And when I analyze, if I've let a trade run past a stop loss point, I think didn't feel like a win there. But you know, we're humans. That's the beauty of being a human and growing and learning and analyzing. And on the flip side, it's also the reason why we have these automated and AI softwares. So they don't think, they don't care. They see these double bottoms, they execute. They see the double tops, they see the breakouts, they execute, and they do it. But ultimately, guys, it's going to come down to experience for yourself. Because at the end of the day, just wanted to let you guys know that whenever you're learning something new, you've got to understand that there's the 4 stages of competence. The unconscious incompetence, meaning you have no idea what to do or how to do it. And then you have the conscious incompetence. You're aware that you're unable to do it, but you're determined to start learning. And then you have the unconscious then you have the conscious competence, meaning that you know what to do. You're doing it, but you still have to think about it a lot. And then you have the unconscious competence is the final one. That's where you get in your car in the morning, drive to work, and you got to work and you think, how the bloody hell did I just get here? Like, can't even remember driving. Everything was done subconsciously or unconsciously. And that's how trading is. When you first start it, you've got to learn all these candles and look at what's happening, and then overcome your own psychology and emotions. But one day you just bang, execute, and you know, doesn't mean that then because you're doing it that suddenly everything's going to go your way. But you know, you got to remember, at one time in your life, a brick was heavy, and now you can probably pick them up. Remember when you wanted to say something as a toddler, as a child, but you hadn't learned to talk yet. You wanted to go somewhere, but you hadn't learned to walk yet. You know, all these things, they come over time. Keep trying and getting these connections, neural connections. Reading and writing, you couldn't do that at some point. You know, all these things are learned skills, and this is just another skill to learn. And I'm more than happy to help anybody do that. So just get in touch. And again, if you want to get involved in this and you understand a little bit about it, but you don't want to trade yourself, then of course we can set you up for success. All right. Have a great day, guys. Thank you very much.